Hi, this is a quick price action video on how I read the markets. My disclaimer is past performance does not guarantee future success. Trade at your own discretion, and it doesn't work every single time. However, I believe that if I follow these systems and these methods, um, I can put myself in a better position to make trades. So one of the things I do is there's so much information available. There's so much information that we can put on our charts. And for me, I try to keep it as simple as possible, so that I can see more of price and less of indicators and less of other things that confuse what is actually happening with the price. So I start with simple black and white candlesticks, and one of the things I like to look at is a frame of reference. So if I'm looking at the daily bar, which is what this is for Euro USD, for the daily bar, I like to look at the frame of reference to the month. So where is price uh, currently at within the current month, and where is price at within the previous month? Um, that kind of starts me off with a big picture view of where things are going. And I know you could go out to the weekly and you could go out to the monthly chart, but bars. But I don't hold trades for that long. I'll hold a trade for several hours to a couple of days at most. And that doesn't mean you have to trade that way. If you want to hold trades for a longer period of time, then of course you would need to look at the weekly chart and the monthly chart. And by chart I mean the weekly bar and the monthly bar. Over here, when I look more of my fine tuning of where do I want to place my entry, where do I want to place stops, where do I want to place um, targets, I then look at the 1 hour bars, um, and within the 1 hour bar, I have the frame of reference for the current day, where's price within the current day's price action, and where is price within the previous day's price action. So you can see here, I'm using MarketScope 2.0, which is from FXEM. It's a it's free. It comes with my trading account. Before, when I was trading a little bit more heavily, I did subscribe to Sierra charts, because they have a lot more functionality there. But I found that I was paying for it and I didn't need it, and what I needed was actually just available for free. So that's another thing too. There's a lot of stuff out there, a lot of ideas, a lot of tools. You just got to know what it is you like, and what it is that's going to fit your trading style, your trading personality, your ability to read and hold on to trades. So I'll begin here, and I'll begin by how would I have traded during the month of June, and what's the information that would have been available to me coming into the month of June. And this is again basic price action. So I start off here with um, putting up this indicator, which is showing just basically drawing in the highs and lows of the previous month. And it says here, show yesterday's band. And I know it says yesterday, but it's a previous period. In this case, I've got monthly band. So this high here in June, this high that's painted here in the June timeline is actually the high from May, which we can see right there. That carries across. And this low here that's painted in June is actually the low from May. And what that does is it tells me that, am I trading outside of the previous month's highs, or am I trading outside of of the previous month's lows, or am I trading within the previous month's trading activity, or price range? And you could see all of June we traded within May's highs and lows. We didn't get above May's highs, and we didn't get below the low from May. So this this kind of information for this type of month that we just passed is ideal for price action traders who trade support and resistance. Because if I came into this month here, almost any trade I would have taken that were to the long side, I would I'd be looking to take, first off, my first reference would be stops below. If I was buying, would be stops below May's low. Because if we get below May's low, then chances are we're coming down to April's low. Similarly, any short trades I take, my hard absolute stops would be anything above May's highs. And chances are, if we break above May's highs, then we're coming up to test February's highs and potentially the high from uh, this this level here. Um, and why this level here? Because you could see, I'm jumping around here for a moment, but you can see there was a skip through here, and this is what I call a trap. When you see something like this, anyone who took a long trade in here, if they didn't have smart stops, they're paying for it. Or if they said, you know what, I'm going to hold this and I'm going to ride it out, and at some point it will come back, and at some point it may come back. But how many months you want to have that money tied up in a losing position? 1, 2, 3, 4, 5, 6 month right now, and still there is no indication that we're going to get up to this level here. And so in order for us to get up to this level here, we would need to break the highs from May. And then in order to break the highs from May, we'd need to break the highs from June. So what am I saying here? Basically, my way of trading is I look for areas that once price goes through that area, expect for it to be either above or below that area for an extended period of time. So when I see that this level here, price drop below it on Euro USD, and then can't get any kind of, so between 117.33 and 116.49, you could see once that's a line in the sand that tells me that I'm looking to trade to the short side. And where else can I find this? I mean, here's another one right here. It's all over the place. It skips through here. And now this one here, this one down here at 110.97, we actually have a frame of reference over here back from January 26th. Where over here, based on the chart I'm looking at right now, we really didn't have a short period frame of reference. So here you just got to believe that when you skip through there, and this is very bearish, you could see what I call something that's very bearish. I'm skipping around here, but it's so much fun to talk about this. And if you just trade with simple price action and drawing in lines like I've done here, you will get levels that will tell you I need to trade the borders of these regions. So what do I see coming in here? This day here we have a gap down. I mean, even if I go all the way back here, and there's something called one-time framing. And I'm gonna jump around here, and I'll make more videos for you. I don't mind doing this, just so that you get an understanding. I don't want you to get scared, or because I'm not remaining on a plan here, you shouldn't get value. I want to bring value to you. So bear with me as I get through some of the ideas here. So one of the things I like to look at is something called one-time framing. Now, why am I talking about this? Because this has to do with support and resistance. But what does it have to do with support and resistance? It has to do with evaluating support and resistance. Now, what does this have to, what does this mean? We can Anybody can look at a chart and put a line like that right there at 122.48. And why would they do that? Because they saw the price came down into that and it shot right out for 1, 2, 3, 4, 5, 6, 7. For 7 trading days, it hit this level at 122.48 and shot right out. So what does that say to me? Without needing any indicators or any tools, just common sense. It means that when price came down here, buyers loved this price so much that they kept buying. As soon as it got down, they bought. And then this day closed up. The following day they continued buying. The following day they continued buying. The following day there was a struggle between buyers and sellers because the day closed down, but we continued to one time frame. What does one time framing mean? It means that we're not either the low or the high is not being taken out from the previous period. And I use the word period even though I'm looking at the daily chart, because you can be one time framing on the daily chart, you could be one time framing on the 5 minute chart, you could be one time framing on the 30 minute chart, you could be one time framing on any time period you select. And one time framing is a strong indication that price has strength in that direction. So here, buy, buy, buy. We are not taking out the previous day's lows. We're not taking out the previous day's low. 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 And again here, we're not taking out the previous day's low. So that tells me that we're one time framing up and buying is strong. And that it all started here. When I see price coming back into it, I said, well, we one time framed up almost 300 pips. But that took 6 or 7 days there of trading. Whereas we one time framed back down, and that took 3 or 4 days, depending on how you count it. Do you count this day or it doesn't matter how you count it, but what is important is that we took quicker one time frame back down. So it's telling me that this level should have put up a resistance a little bit more, and I should have seen balance here. What's balance? Balance is when one bar is within another bar. Here's balance. There was when price got up to here, there was a little pushback from the sellers. When it came back down here, there was a little pushback from the buyers. And these 2 days in here ended up balancing in between. There was a battle between buyers and sellers. Whereas we one time frame out of here, straight up, but as we came back here, there was no pushback from buyers. And as we zoom out, we can see the momentum was to the downside. And this idea that I'm talking about here, it plays out itself in here. It plays out itself in here. It plays out itself in here. So the things that I like to look at in terms of just looking at the chart without any tools, one time framing, choosing support and resistance level. Support and resistance level is simply drawing a horizontal line at extreme points. So there you go. Why did I choose that? Because there was an extreme point here. When price got up to that, it quickly shot back down. Here is a support level. When it got there, it shot back up. And then we evaluate to see if will it hold when it gets there, in terms of, here was an area, in this area here, we can't break up. You can see the wicks are there. We get up to this area here, and it holds in this case, meaning that it didn't break above it. This support area here that shot it up for 7 days of one time framing up, it doesn't hold. It breaks through, and it one time frame's coming into it, and it one time frame's going all the way into it. And there's nothing in this period here that is suggesting to take a long trade. There's absolutely nothing here, right? In fact, it there's nothing even further until you get even down here that suggests to tell you there's going to be buyers waiting because the sellers are just driving this market. They're one time framing this market all the way through. Now, what happens? Here, we break through this balance. Always look for balance. What balance means where buyers and sellers are are struggling to take control. We break through this balance here, and we anyone who had bought here and wanted to hold on, they are now trapped. We come in here and we're giving these buyers who want to hold on false hope by remaining balance here, coming down, going up, coming down, going up. But we're not getting into this area here. If it gets sucked back into this area here, then look for it to run all the way back to this boundaries. Here's another thing that I like to talk about is boundaries. And that's what's boundaries? Boundaries equals support and resistance, and in between the boundaries equal support and resistance, and in between is balance. And so what does that mean? It means in terms of me looking to trade that I want to trade here in this balance, I want to trade the extremes. So I want to take short. Let me clean this up a bit. I love looking at clean charts. I want to take short trades here. Why? Because every time I take a trade, my first question is, where is my stop? And that question helps me get better entries every time. If I want to take a short trade down here, then where's my stop? My stop still has to be above here. So I'm like, that is too big of a risk. Why don't I wait until price gets a little bit higher up, closer to my stop? In this case, if I'm going to take a short trade, as I see price coming back up, based on this one time framing down, I see a little bit balance between these 2 days. This third day, this fourth day, this fifth day, I can start to say, you know what? I see there are sellers sitting here. And if I'm wrong that sellers are sitting here, then price would have to go higher before sellers are enticed to come into the market and drive it down. So therefore, I'd have to put my stop up here. I place my stop up here, and I place my target at least down here. Because if I was thinking of taking a buy trade, then I'd also want to take my longs here, and any breakthrough this, then I got to get out. And here's that breakthrough. And then you look at the inside of the daily the intraday to help you evaluate strength stronger. So I'm gonna redo this video because I don't think I was as clear as I'd like to be. But this is just a teaser to let you know what way I trade and the way I teach. And if you're interested, I could keep making videos for you. I enjoy this. I love this. I love talking about trading, and I love trading. I'm just looking at this here. There's so much money that can be made here. On the days that the market is balanced, those are the days that we really can clean up. The days that we lose money is when it's just one directional. I don't like one directional trading. I like when support and resistance levels hold. But then you can evaluate for when something like this is going to break through. When you see this breaking through at the critical hours, then and you see this as one time framing, you can't trust this breakthrough. You got to get out, take the loss, because chances are I would have been looking to take a long trade here. I would have been looking to take a long trade here if I was flat and I had no positions open. But if I was holding a short trade from up here, which is what oftentimes will prevent me from taking a long trade down here, is that I would be looking for one of my last set of my positions to go for a runner, and here it would go for a runner. And then I come into balance, and again, I'm looking to take short trades here, and then I go. And there's so much I could say, and there's so much I want to say. I hope you can bear with me as I go through this, and I'll just continue to make videos for you. So let me do a quick summary here. The way I trade is I use support and resistance. The way I draw in support and resistance is I find extremes. How do I find extremes? It's very, very simple. You just look at where was the lowest low. Here was a low right there. Where was the lowest low? Right there. Where is the highest high? Right there. This is information that's indisputable. Why is it indisputable? Because I'm using what's happened in the past to guide me to what may happen in the future. So highs and lows have already happened. So when I look at that, I say, then I go further. Now I start off by just looking at here was a low, and we break through it. And on anytime you break through support, you will always come back to it. Here was a resistance, and anytime we break through resistance, we will always come back to it. Sorry, here's support. We break through support. Anytime we break through support, we will always come back to it, like that. Anytime we break through support, we will always come back to it, like that. That doesn't mean that if I'm buying a long trade here, taking a long trade here, and I break, I hold it and come back. No, if you're wrong, you're wrong. Get out here and then get into. Don't be holding bad trades because it's incredibly stressful, and it beyond stressful. It makes you miss other great opportunities. So again, I start off by putting in support and resistance. What are support and resistance? Is basically extremes, something that stands out. You look at the chart, and 10 out of 10 traders will say, yes, here's a level the price had gotten to, and when he got there, we know who was dominant, sellers, because they moved it sharply down. And then when it got there, buyers came in, they moved it sharply up. So that's how I put in my horizontal support and resistance level. I then use time periods, highs and lows, to help me evaluate that level. So this high here is the high for the month. This low here is the low for the month. So as I'm trading in the month of June, my reference points is the previous month's highs and lows. As I'm trading in the daytime, my reference points, my intraday, my reference points is the previous day's highs and the previous day's lows. And oftentimes, once one of them gets breached, we will continue. So in this case here, this was the low for the day on the on Tuesday here. So on Wednesday, I'm going to be looking at this high and this low, and one of these will get broken. And once it gets broken, then I know this is my strong reference point, and I'm looking to trade in the direction of this reference point or as close to it to get into an entry. So as I break through the previous day's low, we continue further down. Now this easily could have come all the way back up. So chances are I probably wouldn't have been taking a trade short here. I wouldn't have been selling here. I would have been buying here, and as it came into this, I would have bought, and then I would have been good for 50 plus pips. I think anytime you get up to 50 plus pips, that becomes a break-even trade. It comes back down, you cannot lose on that trade, especially if you see previous intraday levels are not getting broken. So anyways, coming back to putting in support and resistance levels, I put it in, and these hold until the time period by which I am drawing it in breaks it. So if I start again here and I have this is broken only when the daily bar closes below it, which it did here. So say for example I was using this intra-month support here, none of these had broken it because all of these just came to it and then found support there and moved price back up. Whereas this bar here broke through it, not only in the intraday, but then closed below it. And then that tells me this level is now out. But in here, there was, look at this, how many pips? You're looking at 100 pips that could have been gained here. Oh, one trade here, coming back down 100 pips, and then 100 pips, and then 100 pips, and then 70, 80 pips. So these are the best days to trade when the market is balanced, right? When the market is balanced like that, you know, you get in at the highs, you sell, and you target back the lows. You buy at the lows, you target back to the high. Those, I mean, right in here, these are the fantastic, beautiful, balanced days to trade. You trade balance, you're going to make a lot of money. And you'd make enough money here that this trade that you would lose on would still outseed, like for the out-exceed your gains. Like right here, you know, you could have been up well over 1,000 pips here, and then you lose 70, 80 pips on this trade here, because when you see that close, you get out 5 o'clock, or you, if you're willing to gamble a little bit and see it come back up, you could get out for about 40, 50 pips right there, and take the loss. So if you took a long trade there, and then you got out somewhere around here, 75 pips, it's a loss, but you have over 1,000 pips in here that you can gain. And then the way you avoid taking a long trade here is you look at it and you see, look, coming into this, I am one time framing down into it. So one time framing is the opposite of balance. One time framing means trend. I am moving strongly in that one direction. I am not taking out, or not me, but price is not, the market is not taking out the previous day's high, not taking out the previous day's high, not taking out the previous day's high. However, taking out the previous day's low, taking out the previous day's low, taking out the previous day's low. So this not balanced one time framing is telling me that yes, I have a support level here that held, but chances are as I come back into it again, it's not going to hold. And if it's going to hold, you're going to see a little bit of balance like you see here. And balance, again, is just a struggle between buyers and sellers. They're both trying to take control of the market. And because they're both trying to take control of the market, you see equal opportunity on the buy and the sell side. And on and on. This is 28 minutes. I'm going to stop the video here, but I will make more for you if you're interested. If there's something I said in the video and you want me to make a video specifically on that topic, let me know and I'll do it for you. Thanks for watching, and I hope there's some sense to what I said here. I just believe in this so much, and that it works. It works. So it doesn't matter. You could trade anything, and this thing works. You could trade anything. I'm going to switch here to GBP USD. Let me do a cross. I could switch here to odd JPY. And I mean, look at the balance in here. This is just money to be made when the market's doing this. You buy low and you sell high. You sell high and you buy low again. So these are the days that we really should be padding our account. So anyways, coming into this here, me zoom out, and I can just put in obvious levels. Boom, right there, right? Boom, right there. Those are the extreme ones, and right there, right? Right there, right? I mean, if just let's just stop right there. You see this come down, and where's it coming into? It's coming into where was balance here. So you could watch that market come into this area, because you see, look at this balance here. Look how beautiful this balance is. Buyers and sellers are getting along here, and they're just loving this price. Business is being conducted here. You can see as they broke down, as they come into, there was a little bit of balance here, but the buyers were stronger. And because the buyers are stronger here, look how quickly they march up to this previous resistance level. And then what happens when we get up to this resistance level? We find balance again, but for a couple of days. But clearly the buyers were stronger, and they continue to move it up. Now, when we come back, one time frame down, we one time frame through this, so it's telling us like there's no support here. Would have been a losing buying trade here. Yes, we would have lost money, but when we break through it, we close below it. We start taking short trades, and we make all of that money back. We watch it come right into here. We wait for the day to close. We start taking our trades right down here to the buy, and then look at this. You move right back up. Within the same day, you're up over 100 pips. 2 days, you're up 200 pips, and then we're one time framing here, and you got to believe we're coming right back into where the market is at balance. And so when you do that, you take another trade here, and boom, we take another 300 pips very quickly. Look at that. One time frame, one time frame, one time frame, 300 pips, bank it. You're in the good. So this intraday here, even on this intra-month, this smaller resistance level, there was money to be made here. Because you watch this come in and you buy inside of here, the next day, you're up 163 pips. This is trading on JPY. You're up 160, 70 pips, right? You come right back into this area here. You see this thing close like this. You come back up. You get into this. And you could do it a second time. Boom. You're 152 pips up. You're also 152 pips down. If you were willing to trade the boundaries. Always trade the boundaries. Don't be trading inside. Like, see this balance area right here? You can't be taking entries inside of here. You're going to get eaten up. No, you can't do that. Take your entries at the boundaries. Take your entries at the boundaries. So, what does this mean? If I take we always buy low, sell high. So therefore, there's only one trade to take here, and that is to sell. And if I'm wrong and it continues up, like it did here, I got to take my stop above here. I've now broken above that. Now, sometimes the market does things like this. And when you see it come back into this here and it breaks through that, you got to start to, and you'll see this, by the way. This is a daily, but that would be 48 1-hour bars. And you'll see that, look, we're probably one time framing coming down here. You're one time framing coming down here on the 1-hour chart. So you got to have your bigger time frame and your lower time frame working together. And I like just the daily and the 1 hour. That's enough. Once in a while I'll mix in the 4 hours, but I don't trust the 4 hours as much as I trust the 1 hour and the daily. But whatever money you have made here will far exceed this one loss that you would have in here. Again, right in here, you sell high and you buy low. And this balance, you eat this up, you pad your account, and you just count it and you make money. There is so much money to be made if you trade the balance. If you buy low, sell high. It's simple. You don't need RSI, you don't need CCI, you don't need MACD, you don't need this thing, and you don't need another thing, and you don't need all this other crap. Just draw these rectangular lines, draw these horizontal lines, evaluate them, understand balance versus one time frame, and just count your money. Good luck, my friend. Let me know if you want anything else.